Hi, Paul Gerard from Price Accounting Services, and in this session I want to talk about 2024 year plus working from home deductions. Now in the COVID period 2020 onwards, there's been numerous changes and fiddles to try and reflect that more and more people work from home some or all of the time. And so to do that without also creating a revenue leakage, the tax office have in 2023 modified their approach. Now in 2023 year, we went from the prior use of, say, estimates, reasonable estimates, to up to the February 2023. And then from March 2023 onwards, the ATO expected there be a diligent record of actual days of use and the start and finish times, etc. And if you do not maintain that consistent record, you have no substantiation evidence and you will have your deduction cancelled. So let's walk through the changes and what is permitted and what's not permitted. And we hope to be able to guide you and assist you. So, there are broadly two methods that a taxpayer has available. There's a 67 cent per hour in 2024 fixed rate method for calculating working from home deductions, or the percentage of actual expenses method. Problem is you cannot use both methods. Use one or the other. So it's a bit of a problem sometimes, and we'll walk through some of the rules, okay, to try and illustrate problems and how some can be fixed and some can't be fixed. So the first rule is to claim working from home deductions, you must use the home as a place for work or business. And towards the end of this, we'll talk about business and what different deductions you can claim. But we're just assuming home isn't. When I say a place of business, I'm not talking about your employer's business. I'm talking you operating a business. Okay. So most people fall under the category of they work from home and they get paid salary and wages, etc. There's no requirement that there be a dedicated area set aside. So, for example, you can have an office, that's fine, or you can all share a kitchen table, and you can have mum, dad, and adult daughter all sharing the same space, no problem. Now, the second rule can be a little bit problematic, and we'll talk about that and how it may not be quite as bad as it may sound. So, taxpayer must incur running costs. So, these are internet, energy, phone, stationery. So, the fixed method encompasses everything. So, you can't claim so many cents an hour for this many hours and then also claim the receipts for printer ink and stationery. Not available. I said one method or the other, okay? But you can claim the 67 cents, and it is implied that it includes things like that. So the option really then is you seek reimbursement from your employer, so you're not out of pocket. So that's not a problem. Now, under Rule 2, where you must incur, there's an out, okay? So I use the example of mum, dad, and the daughter sitting around the kitchen table. Now, let me explain this. The taxpayer only has to incur one of those costs. They don't have to incur them all. So let's use the example of the daughter, who may not, she uses mum and dad's internet, she uses mum and dad's power, and she borrows pad and paper and whatever. But she's got a phone. She pays for that herself. So she's eligible to meet the conditions for the fixed rate or the percentage of actual expenses method, and can choose whichever is the higher. Artificial arrangements where you pay your parents for use of the home, etc., that fails. So let's not even go there. Third rule, you can use actual or the hourly rate, plus you can also claim for depreciation and, for example, cleaning, because it doesn't fall under either the hourly or the percentage of actual expenses method. Now, when we get to the fourth rule, record keeping. Now, this is the problem one. So you must retain, and we've got a copy in our tax pack for something you can use. You must retain a record of each day for the hours worked, your start and end times, etc. And you multiply that total calculation by 67 cents, and that's your annual deduction. Okay, so things like annual leave days will be reflected because they will not show as a working day. And an estimate cannot be used, full stop. That was made clear in the 2023 year. And the ATO is very wary of what it calls representation of an estimate, where, for example, on every day, start at 9, finish at 5, and there it is, long, long list. Not going to work. Okay, don't do it. If you start at 5 minutes to 8 and you finish at 6 minutes past 4, put it down. And the next day, if you start a minute or two later, or whatever it is, make sure it's a reflection of your actual working hours, and you're not including annual leave, sick leave, things like that, because you will have the whole amount cancelled. Okay. So some questions that come up. Can I claim a percentage of my phone and the 67 cent for working for home, and also me having phone deductions for my use of my phone at work? And the bad news is, no, you cannot. So the fixed rate covers all of your deductions. But if you're working from the office, 67 cents isn't available because you're not working at home that day. So there is no deduction available. You cannot blend the two. So if you've got, for example, a business schedule and also working from home, you also may only use one method throughout the full year consistently. Okay, you can split it if you wanted to, but you can't. You could, for example, keep two records. One for these are the days I work from home on my small business, and these are the other ones where I work for the employer. Okay. So can I claim phone depreciation and the fixed rate? Yes, you can. Warning though, be careful if you've got a leased phone, because if you have a leased phone, you don't own it. Your lease payments, a percentage of them may be deductible. However, that fails the test for the fixed rate because you can't use both methods. So it excludes, then you can't claim depreciation on leased assets because you don't own them. So only a handset that you've paid for or are paying for. So if you get a handset under a finance, say over 2 years, then that's fine. But not if it's leased. There was a time when Telstra were leasing handsets. I think they've walked away from that these days. Okay, so depreciation. So depreciation, laptops, printers, no problem. Okay, and the percentage of work use that relates to that in the home, not a problem. And it just adjust it for private use. And it could be different for each asset, so consider that. And you can use, if you do have a dedicated workspace, you can include the furniture, for example, a desk, lighting, etc. When I say lighting, I'm talking about a lamp or something like that, which is distinct from that of, and then you might have a chair. Again, we've got the $300 depreciation rule, so watch for that. Now, problem though is in the property, let's say you do have a home office and you've got a split system you've installed because it gets hot and cold, whatever, in that office. Can I claim that for depreciation? The answer is no, because it's part of the building. And the 67 cent method considers all of the use of the building in at 67 cents. So that's a problem. However, if you have a standalone office air filter, for example, it's not part of the building. Yes, you can claim it. Okay. One other question we've seen this year is, can I use the hourly basis if I work in a holiday house? So I don't know, let's say I up and go to Bali and I'm working poolside and I'm doing some work. Obviously, your hours of work and your record keeping must be correct, and you must have incurred at least one cost. You're not going to have energy costs or anything like that, but you might have your phone cost. That may be sufficient, okay, to enable you to claim the cents per hour for the time you work from an RV, rented, hotel, whatever it might be, okay? So that is a broad overview of the working from home deduction. So there's a few things to watch and be careful of. Certainly We're wary of people who say, well, I work from home 52 weeks a year, etc. The ATO doesn't accept that, because a typical worker has X number of weeks for annual leave, X number of weeks for sick leave, you might have public holidays, that all adds up. So your record of the actual days you worked should reflect that. If you don't have that record of days worked, we can't accept the hours. So we need you to confirm in our checklist that you did maintain a record of those hours, and that's how you determine the total hours. Okay. So we hope that's been helpful. If you've got any questions, reach out to Sherry or myself in the office by email or a call, and we're more than happy to assist you and guide you to sort out your issues. So thanks for joining us, and we look forward to seeing you and helping you in another video. Cheers.